Hi guys and welcome back to Yashi. I've been posting a lot. I'm in Italy. I don't have a computer, so I'm gonna try just doing everything from my phone. Let's see how it happens on that side. With that said, let's talk about inflation. The inflation data will come out in the next couple of days. We were 4% on a full level and 5.3% on a core level in the past update. Where will we be potentially? What data can we look at and what can we expect on the next update based on what I'm looking here? This is mostly international data, so it will not be America focused. It can give us some insights, it can give us some idea, but it will not give you America focused data. Also, remember that the CPI report is always a lagging indicator. There's always a delay. It will show you data from the month before, and the data the government uses is always a little bit older. It's not really recent, as some data, for example, in real estate coming from Zillow and stuff. With that said, let's get it started. Where did we start from? Where did we come from? The May data, we had 4% inflation in data year over year in May, and 5.3% on a core level. Core level is inflation minus energy and food, because energy and food are much more volatile. So if we exclude those, inflation was at 5.3%, and Fed tends to look at this data more, even though now they're looking more at normal inflation, which has been at 4%. So we're half as much as we were last year. So we saw an improvement. Not gigantic, we're still not at 2%, but a very good improvement. However, it's seeming to be a little bit stickier. It's not moving too much in the past couple of months. It's still going down, but not as quick as we would like it to go. What can we look at now? We're gonna start with gas prices. I'm gonna look at all of inflation, including gas and food, even if the Fed doesn't look at it. Why? Because I want to give you full insights of what's happening. Gas prices this month. Today is at, on average, $3.543. Yesterday was $3.538. So we're going up compared to yesterday, but compared to a month ago, we're still down. A month ago, it was actually it was 4 cents lower than today. So theoretically speaking, we can still see a downtrend. Let's look at diesel. Diesel is down by almost 10 cents, so the trend is going down. That is very important because diesel affects the cost of transportation. Let's go on to FAO. FAO is the World Food Organization. They track prices across the world. Again, this is world data. This is not American data, so it might affect America too. This is just the average across the entire world. We see that the FAO index averaged 122 points, which is down 1.7 points compared to May, continuing the downward trend that we saw since 2022. We're down 23.4% below the peak reached in March 2022. So the trend is good, and this is on a global level. Food prices are going down globally. What about America? It's very interesting because if you look at the CPI report, the inflation on food is actually positive. It's 6.7%. So it seems like there's an upward trend, mostly from food away from home, so restaurants. However, if you look at the global index, food prices are going down. I hope that the world index will start affecting the American one more and more, because I mean, most of American food, a lot of American food is imported, especially in some areas in America. So it means that if the raw material is getting cheaper, maybe over the long term might get cheaper also in America. Next one, used car prices. Used car prices on a month-over-month basis are down 0.2%. On a year-over-year basis, they're down 4.7%. So we still have a downtrend that we talked about also in my last update. This is very positive. Car prices are going down on the used side. New side, not as strongly yet. However, I saw some data pointing out that we have now an let's say, over supply coming in of 6% over demand, which means that the more cars we will have sitting in inventory, the lower the prices could potentially be in the future. It will also go, let's say, it will also be based on the interest rates we will have in the future. It's again a lagging effect. We will not see immediate results in a matter of 1 month. Fact is that used car prices are going down, so this is a pretty good trend for used car buyers. Let's talk about one of the bigger impacting factors, which is rents. You've been hearing that rents have been going down normally. I believe that the interpretation was very wrong in those headlines. rent is still going up. It's simply going up at a slower pace. It's not going up 10-12% as we saw last year, but it's still going up above the theoretical inflation rate we want to reach, which is 2%. It's going above 5%. So rents are still going up, they're simply slowing down. Fact is, you will not pay less today that you were paying last year. So be prepared with that. There still needs to be fought, and I believe that the Federal Reserve can do next to nothing about this. The main thing that can help inflation in the housing is supply, building more, and until we don't have a strong building sentiment by builders, we will have a bigger and bigger problem between the supply of homes, both rental and sales homes, and the demand going up. So this is the only data point that is scaring me a little bit. Now, I am a real estate investor, so on one side nice, on the other not really, because this is harmful for the American, let's say, renter. Last but not least, transportation costs. We're gonna focus on freight. I like the freight index a lot. Freight rates are down a ton amount. So if we look at 40 feet shipping containers across US to North Europe, rates were $7,000 for a 40-foot container last year. Right now it's $1,590. Want to talk about deflation? This is more like a market crash, which means that if your goods might cost the same, the transport at least will cost less because the freight rates are going down, which, I mean, they were more than four times higher than today last year. So this is very good news if you are a consumer. So what are we expecting for the next CPI report? We have one data point, which is housing, which is staying stable or not really declining at all. It's still staying above the inflation rate. Food index is going down 23% compared to last year. Gasoline is still going down and still much down compared to last year. Energy is going down in general, and used car prices are going down. So are we expecting any move at all? It depends on how much impact housing will have and how, let's say, updated the data that the Fed uses will be on the housing side. The problem of the Fed data in terms of housing is it goes through surveys which are not as accurate. So it's more like a Russian roulette. You never know what you're gonna expect on the Fed data when they put out the housing data. Guys, this is all for now. I cannot really give you a prediction on this one. I'm hopeful that at least we will be stable where we are, maybe drop a little bit, but I don't think it will be anything major. Housing still has a big impact over all of this. This is all, guys. Thank you for watching. Let me know if you would like to add some other data point, and let me know what you think in the comment section. Ciao.